I remember the day I got my first real job offer. $75,000 a year. I sat in my car in the parking lot and did the math on my phone. That's $6,250 a month. I started mentally spending it. $1,800 for a nice apartment, $500 car payment, groceries, gym, going out, a little left over to save. I thought I was about to be comfortable. Then I got my first paycheck. It wasn't $6,250. It was $4,300. I stared at it. I opened the pay stub and there were lines I had never thought about. Federal tax, state tax, something called FICA, health insurance premium, 401k contribution. By the time all these invisible hands had reached into my paycheck, almost a third of it was gone before I could touch a single dollar. And here's the part that still bothers me years later. Every major financial decision I had already made, the apartment I signed the lease on, the car I financed, the lifestyle I was mentally building, all of it was based on a number that didn't exist. I was planning my life around $75,000, but I was living on $52,000. My name is Tom. I reached financial independence by learning the hard way that every number the system gives you is a sales pitch until you do the math yourself. Hit subscribe if you're tired of feeling like your paycheck disappears before you can spend it. Because today, I'm going to show you exactly where every dollar goes and how to stop making decisions based on a number that was never real. Here's something nobody explains to you when you enter the workforce. Every job has 3 numbers attached to it, and the one you negotiate over is the least useful of the 3. Number 1 is what your employer actually spends to employ you. Number 2 is your gross salary, the number on the offer letter. Number 3 is what actually shows up in your checking account. The trap is that you plan your entire financial life around number 2, the gross salary, which is essentially a marketing number. It's not what you cost your employer, and it's not what you take home. It's just the number in the middle that everyone fixates on. I'm going to go backwards, starting with the number that affects your daily life the most, and ending with the number your employer hopes you never find out about. Let's start with number 3, what you actually take home, because this is the only number that matters for your daily life. You earn $75,000 gross. Here is what happens to it before you see a cent. Federal income tax takes roughly $7,950. The standard deduction for a single filer in 2025 is $15,750, which brings your taxable income down to $59,250. The government then applies 3 different tax rates to different slices of that income: 10% on the first $11,925, 12% on the next $36,550, and 22% on the remaining $10,775. Most people don't realize their salary gets taxed in layers, not at a single flat rate. Next, FICA takes $5,740. This stands for the Federal Insurance Contributions Act, which is the government's way of saying Social Security and Medicare. You pay 6.2% for Social Security and 1.45% for Medicare on every dollar you earn. This one surprises people because it's a flat tax with no deduction, no exemption, no negotiation. $1 of your salary gets hit with FICA the same as $75,000. Then, state income tax takes roughly $3,400, depending on where you live. Some states, like Texas and Florida, charge 0. Others, like California and New York, take 5% or more. The national average lands around 4 to 5%. So far, the government has taken about $17,100, roughly 23% of your salary, and you haven't made a single financial decision yet. But we're not done. If your employer offers health insurance, which most full-time jobs do, you're paying a premium that gets deducted before your money arrives. The 2025 KFF Employer Health Benefits Survey found that the average employee pays about $1,440 a year for single coverage. If you have a family, That jumps to nearly $6,850 per year. That's another $120 to $570 a month that vanishes from your paycheck, and most people forget to account for. Then there's your 401k. If you're contributing 6%, which is the most common default rate and usually the minimum to get the full employer match, that's another $4,500 a year being redirected before you see it. Yes, it's going to your future self, and yes, it's the smartest money you'll ever not spend. But it's not paying your rent this month. Add it all up. Federal tax, $7,950. FICA, $5,740. State tax, $3,400. Health insurance, $1,440. 401k, $4,500. Total deductions, roughly $23,000. Your $75,000 salary is now about $52,000, which is around $4,300 a month in your checking account. That's 31% of your salary that you never touched. You sat across the table from a hiring manager, negotiated your compensation, and agreed on $75,000. But the number you're actually living on is closer to $52,000. The other $23,000 was already allocated by the government, the insurance company, and your future retirement account before you could decide what to do with it. Now let's look at number 1, what your employer actually spends. This one shocked me when I first learned it. Your employer doesn't pay $75,000 for you. They pay significantly more, and the difference goes to people who are not you. First, your employer pays their own FICA tax, matching your $5,740 for dollar. That's an extra $5,740 that comes out of the company's budget with your name on it that you will never see on a pay stub. Second, the employer pays the majority of your health insurance premium. According to the same KFF survey, for single coverage, the average employer pays about $7,800 per year, which is 84% of the total premium. You pay $1,440. They pay $7,800. You're only seeing the small slice. If you have a family plan, the employer's share jumps to over $20,000 a year. Third, if they offer a 401k match at 3%, that's another $2,250 per year they're contributing. Then there's workers' compensation insurance, federal and state unemployment taxes, and other mandated costs that add another $1,500 to $2,400 depending on the state. When you stack it all up, your employer is spending roughly $93,000 to $95,000 to employ someone who takes home $52,000. The Bureau of Labor Statistics confirmed this in 2025. For private industry workers, benefits add about 30% on top of wages. Salary is only 70% of total compensation. There is a $41,000 gap between what your employer pays and what you bring home. Where did it go? To the federal government, to the state government, to insurance companies, and to your retirement account. Everyone gets paid before you do. You are the last person in line to benefit from your own labor. Now here is where this becomes dangerous. The salary trap isn't just that you lose 31% of your paycheck. That part is math. The trap is that you make every important financial decision of your life using the wrong number. When you're apartment hunting, you calculate whether you can afford the rent based on $75,000, not $52,000. When you're financing a car, the dealer runs your debt-to-income ratio using your gross salary. When you apply for a mortgage, the bank uses a formula called the 28% rule. They say you can afford a monthly housing payment equal to 28% of your gross monthly income. For a $75,000 salary, that's $1,750 a month. But 28% of your actual take-home, $4,300 a month, is only $1,200. That's a $550 per month difference. The bank is telling you that you can afford $550 more per month than your actual money says you can. Multiply that across a 30-year mortgage, and you're talking about nearly $200,000 in additional housing cost that was justified by a number you don't actually earn. This is why so many people feel house poor. This is why the car payment that seemed manageable on paper feels crushing in practice. This is why 65% of Americans say they're living paycheck to paycheck, according to a 2024 CNBC survey, even people making six figures. It's not because they're irresponsible. It's because every financial commitment they made was sized to a number that was 31% bigger than reality. They're not overspending, they're overcommitted, because the entire system, the bank, the car dealer, the landlord, the real estate agent, everyone uses gross income to determine what you can afford. Nobody in the transaction has any incentive to show you the net number, because the net number would make you buy less.
This also explains why raises never feel as good as they should.
You're making $75,000 and you get a $10,000 raise. Your new salary is $85,000. That sounds like an extra $833 a month. But that extra $10,000 doesn't get the same treatment as your base salary. The first $75,000 has already filled up the lower tax brackets. That extra $10,000 sits entirely in the 22% federal bracket. Add FICA at 7.65%, state tax at 4.5%, and your 6% 401k contribution, and your $10,000 raise actually puts about $6,000 in your pocket. That's $500 a month, not $833. You lost 40% of your raise to deductions before you spent a dollar of it. And you probably celebrated that raise by upgrading something. Maybe you moved to a slightly nicer apartment for $200 more a month. Maybe you bumped up your car lease. That one celebration can eat half the net raise, and suddenly the promotion that was supposed to change your life changed your tax bracket instead. The gap between gross and net widens as your income increases. The higher your salary, the bigger the percentage that disappears before it reaches you. I want to go back to that employer cost for a second, because there's an important insight hiding in it. Your employer spends $93,000 on you, but only $75,000 shows up as salary. That means roughly $18,000 is going to benefits that you might not even fully understand or use. The $7,800 in employer health insurance contributions is real money being spent on your behalf. But most people have no idea what their employer actually pays. They only see their own $120 a month deduction and think that's the cost of health insurance. It's not. The real cost is closer to $780 a month. You're seeing 15% of the bill. This matters when you're thinking about switching jobs. People compare salaries. They see $75,000 at company A and $80,000 at company B and think B is obviously better. But what if company A pays 90% of your health premium and matches 4% on your 401k, while company B pays 70% and matches 2%? When you factor in the total compensation difference, company A might actually put more money in your life. I've seen people take a $5,000 raise and lose $8,000 in benefits because they didn't know how to read the full picture. Your salary is the visible tip of the iceberg. The benefits are the part underwater that can either hold you up or sink you when you switch jobs without checking. So how do you escape the salary trap? The answer isn't to earn more. If you don't fix the underlying illusion, earning more just means losing more to the same invisible deductions. The answer is to start living on the real number. Here is exactly what I did. The first thing I did was calculate my monthly net. Not my annual salary divided by 12, my actual paycheck amount after every deduction. For a $75,000 salary, that was $4,300 a month. I wrote that number on an index card and taped it to my bathroom mirror. Every financial decision I made for the next year had to be justified against $4,300, not $6,250. The effect was immediate. I suddenly couldn't afford the apartment I was eyeing. I suddenly realized my car payment was eating 14% of my real income instead of 10%. Numbers that felt comfortable against $6,250 felt tight against $4,300 because they were always tight. I just couldn't see it. The second thing I did was build what I call the real budget. Most budgets start with gross income and subtract estimated taxes. My budget starts with the number on my pay stub after every deduction has already happened. That $4,300 is my starting line, not $6,250. From that $4,300, I allocate everything: rent, food, transportation, entertainment, additional savings beyond my 401k. If it doesn't fit in $4,300, it doesn't happen. No credit card bridge, no next month I'll catch up. The beauty of starting from the net number is that your 401k is already funded, your taxes are already paid, and your health insurance is already covered. The $4,300 is genuinely yours. Every dollar of it is spendable. There are no more surprises. The third thing I did was reframe raises. When my salary went up $5,000, I didn't think of it as $5,000. I pulled up a paycheck calculator and found out it was actually $3,000 in take-home. Then I asked myself one question: what does $250 a month mean for my life? Sometimes the answer was, invest it all and pretend the raise never happened. Sometimes it was, put $150 toward investments and use $100 to upgrade one specific thing that genuinely improves my daily quality of life. But I never, ever spent the gross raise amount, because that number doesn't exist in my checking account. Here's the thing I wish someone had told me in that parking lot the day I got the $75,000 offer. The salary on your offer letter is not your salary. It's a number that 4 different parties have already divided among themselves before you get the remainder. The federal government takes a cut, the state takes a cut, Social Security and Medicare take a cut, your insurance company takes a cut, and if you're smart, your retirement account takes a cut. What's left, the remainder, is your actual life. Every apartment, every car, every dinner, every dollar you invest beyond your 401k comes out of that remainder. If you size your life to the number before the cuts, you'll spend every year confused about why you feel broke. If you size your life to the number after the cuts, you'll spend every year building wealth that actually compounds. And once you understand where every deducted dollar actually goes, you can start asking smarter questions, like whether an HSA or FSA could claw back some of those tax dollars before they leave your paycheck. That's a whole separate conversation, and I'll break it down in an upcoming video. Go pull up your last pay stub right now. Not the gross line, the net deposit line. That's your real salary. Write it down, tape it somewhere you'll see it. And the next time someone asks what you make, don't tell them $75,000. Tell them $4,300 a month. That's the number that buys groceries, pays rent, and decides whether you're building a future or just running in place. Drop your net monthly number in the comments. I'm curious how many of you have actually done this math before. Hit subscribe because next week I'm breaking down the exact account structure I use to make sure every dollar of that net number is working for me instead of against me. I'll see you in the next one.